time to reveal, of course, Raamdeo's long-kept secrets. Joining us now is Sanjoy Bhattacharyya, founder and partner of Fortuna Capital, and more importantly, one of Raamdeo's oldest friends. They were just telling us, as Sanjoy joined us, that they have known each other since 1986. Well, that's what, a 30-year partnership.
Yeah,
that's a generation that you'll have been together. Well, Mr. Bhattacharyya, thank you very much for joining us. We had to play the Raamdeo card to get you into the studios in the first place. So let's begin by asking you, what is Raamdeo's investment philosophy? What do we have to learn from him?
Okay, that's a good question, because it I think the three things I've really observed over this period of 28 years, I think three things stand out. It's often said, Buffett says that investing is about character. And really three elements stand out about Raamdeo. One is humility. Second is patience. And the third is discipline. And it's very unusual to find this combination in a single individual. And let me illustrate some of these. I think he's very well known for buying Hero Honda, which I was privileged to own along with him. We both actually bought it on exactly the same day. So it's often in my life that I write piggyback on Raamdeo, for which he doesn't get credit. But in Hero Honda, I think he still owns it, if I'm not wrong. Yeah. It's almost 20 years.
I don't think you've sold any of your Hero Honda shares.
No, but we understand that the story was you had asked him whether you should buy Bajaj Auto, because at that time that was the big boy.
Correct.
So tell us the process. What was the conversation?
It was a very bizarre conversation, and it reflects, I think, one of the things that I said. You know, it's also his clarity of thought. I used to write reports freelance for people at that time, for different investment banks, and I'd just written a report for one of the foreign banks on Bajaj Auto. And I think what struck us is three or four things which form the basis or the foundation of the investment thesis for Hero Honda.
One, this is which year you are talking about?
96,
yeah,
95, 96.
95.
And 95. So one is that India's personal transportation infrastructure, barring a few cities, a few major metros, is incredibly pathetic. Second, that a large part of what two-wheeler serves as in rural and semi-urban areas is not just personal transportation, but also is a means of livelihood where you transport what you produce. Like if you if you have buffaloes and you want to transport the milk to a mandi, so you transport it using a motorcycle. And the third is the fact that people are very cost sensitive, much less so concerned with aesthetics as with fuel efficiency, cost, after-sales service, spares available, and the financing of the vehicle, because most two-wheelers are bought by taking a loan. So if you can make this available, this combination available to a potential buyer of a motorcycle, you've secured a huge advantage. And in fact, at that time, many people were obsessed with the idea that the differentiator is aesthetics, which actually Hero Honda didn't do, and Raamdeo, I think, was very quick to cotton on to this.
But what was the reason for which he preferred Hero Honda over Bajaj Auto?
One, it was positioned in the entry-level price segment.
Okay.
Second, that it was a far more sturdy, fuel-efficient bike, suited to the condition of roads in rural India. And third, I think he was greatly, as I was too, by the fact that it was run by an individual who had striking clarity of purpose and who was exceptionally focused in achieving the objective of becoming the market leader in this country, Mr. Brijmohan Munjal. So I think that these combinations, and we were buying it at a fabulous price. I mean, if you think his average price, I think today adjusted for our first purchase is 11 rupees.
Oh my God.
I was expecting at least 100.
No, it is about...
It is actually 100, but 10 shares for every share.
It's for 2,600 now.
It's 25.
25.90.
1,000 rupees dividend already done.
Okay.
Yeah.
They have not taken that.
So if you think of that, this is in fact a hallmark of how you invest.
Okay, so let's talk about some more hallmarks. A couple of bets that you guys bought together and a couple of stocks that he bought while you missed. And I know one of them is Nestle. So I want to talk about that and pit you against each other.
Yeah. No, I don't think. I think it's just my sort of, what shall I say, inability to see the logic. And that's what differentiates, people such as him from the rest of us. I think in Nestle, it's not easy to have bought it because when he bought it, I think it was, 4 years ago? So it was trading at 1900 rupees.
And at that 1700, yeah.
Yeah, somewhere in that ballpark. Yeah. And the earnings for that year would have been about 60 rupees. So it was trading at a P multiple of roughly 30, give or take. I mean, maybe 28, something like that. And being, the sort of person I am, and this is, how people can get the notion of value wrong. So it's difficult to see value in a stock that is growing at 15% at a PE multiple of 28. But to the real, what shall I say, the craftsman, the real high quality secular growth investor, which is the style that Raamdeo practices, long-term secular growth, bought at a close to full price, but where the power of compounding works for you. Nestle was actually a wonderful stock to buy because what he said is that many of its products like Maggi, Cerelac will continue to compound at these rates and throw off cash flow at a higher rate than growth because they need less money to be invested. And so if you're compounding faster than even, let's say, mid-teens growth, and you're buying it at 28 in very short order, that stock will effectively be trading for you at a lower P. Plus you get a high dividend payout. Because they distribute something like 60, 65, 70% of profits as dividends. So the business doesn't need any capital to grow. So at 28 times, great value. Okay. Difficult to visualize.
We want to hear you all converse with each other. Raamdeo, you have any question for Sanjoy?
Yeah, so...
Which investors would learn from, obviously.
Every day,
and if you all can discuss which are the next stocks which will be the leaders of the market as well.
I think he only has to tell. What
That's not true at all.
So, but you tell me, like Bharti, I mean, we both are not owning the stock, and yet it is a tremendous opportunity. So there are two pieces of business. One is which is not doing very well, and one is doing exceptionally well.
Which is Zen, the one which is not doing well.
Yeah, so that is depressing the ROIC of the company, ROE of the company.
Correct.
Combined ROE.
Correct.
So I'm confused because the value of Indian piece is increasing big time. It's number one player. It is winner takes it all industry, and they are in absolutely pinkiest of the health. And regulatory arbitrage probably is going to work in their favor now than ever before.
Yeah.
So the issue is that they have one piece which is not doing well, and other piece doing very well. And the combined ROE is like sub 15%, which I don't like. I mean, we have to have, because we own the company, joint company, we don't own one piece here. There.
Correct.
So how do you look at this approach?
I think this goes back to a conversation that we've had often, and that's very unusual in India. But it hits at the essence of Bharti. I mean, Bharti is the archetypal example of this. Capital allocation.
Okay.
That's what.
A very poor capital allocation on a massive scale. $11 billion,
Yeah.
invested in a manner that
is... Can it be that, I mean, at some point of time, they might say, okay, I mean, this piece is $10 billion is worth, say, $5 billion, and that loss is already built into the price. But this piece is going to become, say, $40, $50, $60 billion worth.
And so they demerge.
Part side. I mean,
if you can visualize that happening, if you think that management has the courage to do it, and you're very certain, you have a high level of conviction that the Indian business is actually worth $40 billion, which I think is not a, piece of cake. I mean, it's not obvious that it is. Then I think, yes, then you should revisit it. But in the absence of that ability to envision such a thing, no, I don't think so.
Now,
well, why don't you tell us?
Yeah, so what would you do? Would you buy?
I definitely wouldn't buy.
Okay. This is what happens. Then I definitely go and buy.
That's nice.
Can you imagine a better way to make money than to have a bozo tell you what not to do?
Oh my God!
Okay, but please tell us, what's the next Hero Honda? What are you looking at as your shortlist?
No, so like...
Because I want him to
I'll tell you, I don't know, there is nothing on the table, but whenever I get an idea, I pick up phone and I ask him, is your machine on? So we both are on the same page, so that he's on C-line, I'm also C-line. Okay, so we understand what it is. Then,
they're actually very bad illustrations of the modern investor, because neither of us is particularly tech savvy, neither of us has ever built, these elaborate spreadsheet models, and most of whatever little we know is in our heads.
Then what do you go by? What is it in your head?
So, as he was saying, we both subscribe to Capital Line. And this is not a plug for Capital Line on national television, but both of us use Capital Line extensively. That defines our level of tech literacy. We can't go beyond that. And usually, I think the first thing that either of us do when we look at a stock is to do what I'd call a hygiene check in terms of the basic numbers, the sales growth, the capital efficiency, the stability of operating margins, and things like that. So our universe itself is a reasonably, what shall I say, a safe universe. We don't hunt in places where, we might get into serious trouble. Okay. I think that's one thing that has led to this fantastic track record he has in terms of compounding money. Mm-hmm. He's very disciplined about what he invests in. And I must share this with you, because if ever an investor could have a patent on an idea, he is the one guy who can have a patent on this idea. It's an old idea. Benjamin Graham said that investors lose the maximum amount of money by buying mediocre stocks at sensible prices. Because the mediocre stock then doesn't do very much, and the price you've paid is a full price, thinking it's cheap, and it backfires. So Raamdeo and I thought about this often. And we said, why do we lose money as frequently as we do? And his answer, it's best illustrated in Hindi, which is how he came to it originally, but it can be sanitized. He said, basically, you mustn't buy tadpoles and hope they turn into princes. And we call that notion in Hindi, when we first thought of it, we call them barsati mendaks. Because the tadpoles croak in the monsoon. Yeah. But that's the only time they croak, which means they do very well. They're very excitable and happy. But as soon as the monsoon goes away, the tadpoles stop croaking. And many businesses in India, in fact, a vast majority of the universe is like this. And I'm not talking just of cyclicals. There are many businesses which are seen as secular growth, where the growth isn't actually secular. But the ability to have a mouse and extend it on a spreadsheet doesn't make the growth secular.
Actually, I have one question on one stock which has not got as much prominence as Hero, but you've created some significant wealth in that. That's Eicher Motors.
Yeah.
I mean, 2 years back, the stock was at 1,300. Yeah. Today, it's at close to 9,000. Yeah. And a lot of people are talking about 12,000 levels as well. Yeah. Would you still back it and expect those levels on Eicher?
Yes. See, Eicher is a story of a little bit of luck, in the sense that the story has not played out the way we thought, and yet the stock has done wonderfully well. And this is the power of monopolies, the qualities. I bought Eicher. I actually heard about Eicher at about 600 rupees. By the time I researched and got a planned visit, it was 1,800 rupees. From 1,800 to 2,100, we bought whatever this thing. And I checked, because I am good at business call, but management call is only his territory. I have always been wrong. A lot of times I have suffered because of bad business. A great business run by bad management. It's a 1 multiplied by 0. And I have suffered like that. So I always do a hygiene check with him for a management call. And he kind of cleared it. So then I said, now I'm in good territory. And then, one of the things was, Eicher has 4 franchises. First is their motorcycle, which is doing exceedingly well, much better than I ever thought 3 years back that it will do. Second is the Canter Enterprise, that LCV segment. That's where they are king, their price leader, their market leader, their volume leader. Third is the engine, the export outsourcing. They have 100,000 engines they have put up for France and Japan, and 1/3 to be used in India. So that project was just about taking off. It is, I think, in the last 6 months they have just about taken off, and that was conceived at a 42 rupees to $1 kind of thing. So it is export oriented. At 60, 62, the economics will be far superior as it scales up. And the fourth last was a truck. This is world's biggest and most respected truck company, Volvo. And they had all the products, but they didn't have Indian cost structure. So how do you sell to Indian price sensitive market a global quality at Indian price? And that's how the marriage of Volvo and Eicher comes. So I met the distributor, and this Sadaji is very respected. He said, if there is one company which can challenge the dominance of Telco and Ashok Leyland in the next 6, 7, 8 years, it is going to be Volvo. And so we had one Eicher, Royal Enfield, which was uncontested. We had Canter, which was doing very well. Engine would have to do very well. And this is a lottery. If ever this guy is able to successfully challenge, I think going to be sitting in a ever growing CV market. So I thought that this is a company, once in a lifetime, this kind of companies are born. With the world's biggest company out here. So I said it must be 50-60,000 crores kind of a market cap eventually. And that time market cap was about 5-6,000 crores when I was buying at 2,000.
Okay.
About 28 crores equity and 2,000 rupees price, so about 5,000 crores kind of market cap. So 5 to 60,000. So it was a 12-bagger in my mind at that point of time itself. Then the story starts. Having bought it, now then nothing plays the way you think. The CV market went down. Okay. And Royal Enfield took off like never before. I mean, everybody wants to buy Royal Enfield. Probably this is a contribution of that Harley Davidson trying to do all the advertisement in India. Now people want to do Harley Davidson, but not at 8 lakhs. They want to do it 1 lakh. So that is where Royal Enfield comes. So I think the story eventually works out very different, but we bought at a very reasonable price. At about 4-5,000 crores, you had a cash of about 1,500 crores and profit of about 400 crores at that point of time. So you were buying at about 20p with a growing 30-40% and a net cash balance sheet and all these 4 franchises to work. So that's how it was thought out. Downside was limited, upside was doubler at least in 5 years.
Okay. Well, we have gone on for a long time. Thank you very much. We have to wind up. But Mr. Bhattacharya, we began the conversation with Raamdeo by asking him about whether we are sitting on the start of a bull run. He said that I concentrate on companies. I don't bother about markets and economies. But nevertheless, the same question to you. Are you getting the feel that we are somewhere like the 2003 moment?
I must say, let me applaud him for giving the right answer.
Okay.
Because my answer would be ditto. This is something I've learned from him over the years, that you don't worry about timing the markets. In fact, that's the essence of speculation. And that's the fine line that divides speculation from investing. So, to me, again, couldn't put it better than he did. A lot of pieces are falling in place to answer your question, to be more constructive. But I think to be part of the brigade that says this is the beginning of the next dramatic big bull market would be out of context. I'll tell you why, in my view. And I think I'll have egg on my face very, very quickly in a year's time. But 2-3 things stand out. Never has the world been more at geopolitical risk across different parts of the world than it is now. And today, India is a market that is affected by international capital flows to a greater extent than it has ever been. When we started in 86, it was very different. 92, very different. The first time the market took note of the fact that we live in a globalized world, in an interconnected world, was 2000. And how sharp that was. Second reason why I think this is not, one can't be completely sort of unambiguous and say we're off to the races. Second reason I would say is that there isn't a margin of safety. The market is trading at its long-term average. It's not dirt cheap. Yes. And I think the third reason, I think that the averages conceal incredible overvaluation and tremendous cheapness.
Oh.
So the average is not reflective of really, it's typical of statistics that very often they conceal more than they reveal. And the question is, when you go into buying some of the stocks that on the face of it appear very cheap, you're taking the sorts of risks that you've got to be willing to live with. So why are those stocks cheap? Many of these stocks, these cyclicals, are cheap because, of China. What's happening in China? Many of these stocks are cheap because there's a tremendous concern about deregulation of these businesses where they exist. Or the fact that the level, like BHEL, wonderfully cheap stock. Are people rushing out in the streets and alleyways to buy BHEL? I don't think so. I'm not clear. So, Chinese competition in turbines. And one can go on and on. The interesting thing is, and goes back to what Raamdeo said, the smart money is made by having good temperament. So you take a company like Ipca Labs today, where, this is a wonderfully run company, tremendous track record, over the years, everything right. It has evolved in a way that is almost copybook. And today, when you've had a great chance, the stock is down 20-25% from a recent 1-month high. Suddenly everyone has fled. Everything has been forgotten. So people are very poor sort of processors of information. And they use all the wrong cues to make investment decisions. They think short term. They forget data. They're affected by what they've been exposed to most recently. And that's why I think people don't make as much money as they should. And that's why he's as rich as he is.
IPCA management, IPCA business. What have you got to say? You said he's the management guru and you are the business analyst.
He's both actually.
Okay.
So coming back to, I think short-term problems are given extra weightage in the price movements, and people forget that investing is a little long-term. On a 5-10 year basis, I don't think no business goes in a straight line. Probably I as a businessman know that there are problems in businesses, and these are when you are exporting to such large number of countries and molecules, some problems come maybe internally or even externally. So they are part of this thing. They are not indicted for some integrity loss. It's just a management process, a production process, some lacuna here and there. So I think it's a surmountable problem.
In fact, if I can just add to what he's saying, what defines high quality management from not so high quality management? How they deal with adversity. Yes. So Ratlam is an illustration of adversity. If you think IPCA management is high quality, they will fix it. It's only weak managements which do badly in adversity. High quality managements always deal extremely well with adversity. And that's why I think IPCA is such a good idea.
I think the markets have actually heard what you said. The stock is up 1.5%. But this was by far one of the most enriching conversations we've had in a very long time. Thank you so much, gentlemen, for joining us. We have to wind up.
The message that they give us is that look for good quality managements, look for good quality people. Today we have found 2 good quality people to speak to our viewers. Thank you very much, Raamdeo and Mr. Bhattacharya, for joining us.